Hello, I'm Peter Towers, Managing Director of ESIC BIZTOOLS. Welcome to Accountant's Minute. Tax incentives for early stage investors. The early stage innovation company legislation offers significant taxation benefits to eligible investors. And obviously, to make early stage innovation companies work, there's got to be investors. So investors can qualify for two major tax incentives. The 20% tax offset, which is available for sophisticated investors up to $200,000 and for retail investors up to $10,000. And the capital gains tax exemption, which is available to investors from the end of the first 12 months of their investment until the end of 9 years. Sophisticated investors are people who have had their accountant prepare a statement to the effect that their net worth is over $2.5 million and their assessable income for the last 2 years has exceeded $250,000. For companies to qualify as an ESIC, they need to have passed 2 out of 3 tests. The first test, which we've called the provisional test, relates to whether the company is under 3 years old. However, in some instances, companies aged up to 6 years old can be eligible to be classified as an ESIC. The company's expenditure in the previous income year, which is 2015-16, must be under $1 million, and the assessable income in that year for the company has to be under $200,000, excluding any amount of grant income received under the Accelerating Commercialisation Grant Program. And the company cannot be listed on a stock exchange anywhere in the world. Now, having passed the provisional test, the company should then proceed to assess itself under the gateway test. Under the gateway test, the company needs to earn at least 100 points. And these can be earned from activities such as research and development expenditure, being a participant in the Accelerating Commercialisation Grant Program, having participated in an accelerator program, having already raised $50,000 or more from arm's length investors, whether the company has already registered patents, plant patents, innovation patents or registered designs, and whether the company has entered into an agreement with organisations that are listed under the Higher Education Act or the Research and Development Act. If the company has earned 100 points or more and they have maintained the records as part of the substantiation of that, then they have self-assessed themselves as being a ESIC. If the company is unable to satisfy the requirements of the gateway test, they can then move into the principles-based test. And in this test, there are 5 questions that the company needs to have answered yes to and be able to supply supporting evidence. And these tests relate to whether the company has developed a product, process or service that the company intends to commercialise, whether the company believes that they have the ability to scale the business, whether the business has got high growth potential, whether the product or service meets the requirements of a broader market than just the local market, and whether there are competitive advantages for the business. The company is able to self-assess, but from an investor's point of view, you need to make sure that they have undertaken this in a professional manner. And as accountants, you will need to be assisting your clients to make sure that a company that they are planning to invest in has undertaken this self-assessment process in a proper professional manner. Ultimately, the final arbitrator of whether the company is an ESIC is going to be the Australian Taxation Office in conjunction with Oz Industry. But many companies will be trying to get investors to invest at an early stage, in some instances prior to the ATO giving their formal answer. Now, under the gateway test, this should be fairly clear cut. There are 7 processes listed under that test, and a company has either done them or hasn't done them. And they should be able to supply supporting evidence. Under the principles-based test, there is a requirement for an opinion to be expressed, and that opinion should be supported, in each case, the 5 questions, by supporting evidence that the company is indeed committed to the path that those questions are relating to. The tax incentives are not available for shares that were not purchased directly from the company. So the ongoing purchase or sale of shares does not transfer the entitlement for the 20% tax offset or the exemption from the capital gains tax. Investors in a widely held company, so a public company, cannot acquire shares in a company that aspires to be an ESIC and obtain the taxation benefits. And an investor who holds more than 30% equity in the company is not entitled to the taxation benefits. And shares that have been issued as part of an employee share scheme are not eligible. So that's the background of the tax incentives that are available for early stage investors. The government is hoping that this is going to be a significant marketplace, and many of you, I am sure, will closely look at companies who are claiming to be an ESIC as part of your investment process, because as compared to the traditional Section 708 of the Corporations Code investments, an investment in an early stage innovation company offers some additional benefits, which are obviously the tax offset and the capital gains tax exemption. For accountants, if you want to know more about this overall process, ESS BizTools have developed a special product package which we are marketing for $299 including GST for a 12-month subscription, available 24/7 in a office. Or you could subscribe to the total ESS BizTools Gold package for $2,970, which includes the early stage innovation company package and numerous other products and services. We are conducting a special webinar on tax incentives for early stage investors on Monday the 26th of September at 12 noon. You can register for that webinar by logging on to our website essbiztools.com.au. And if you would like to receive the article which we have prepared on tax incentives for early stage investors, also go to our website and register for the article which we will then send to you. So accountants, I hope this has given you an idea of how this process works. And if you are showing this webinar recording to any of your clients who are potential investors, I hope that this has outlined the journey which you need to undertake to be able to invest in these new type of companies. Have a wonderful day. Goodbye.